Guys, if you could give a heads up once the
Recording in progress.
Good evening. Today we have with us CA Hamza sir, the founder and managing partner of Sanchil Hamza and Co. LLP. With an extensive experience in statutory audits, tax advisory, and assurance services, Mr. Hamza has built a reputation for combining technical expertise with practical insights that help businesses stay compliant and grow sustainably. Through this conversation via an interview, we aim to understand his perspectives on the evolving role of auditors, the challenges in current regulatory landscape, and the skills young professionals should develop to succeed in this field. With that, we'd like to begin our auditing interview with Hamza sir.
Thank you. Thank you for your warm welcome.
Okay, sir, I'm Manas, and I would like to begin with the first question. So, in your practice, how do you define the scope of an audit for a new client?
For any audit, before getting to know the scope, you have to first understand the client's requirement. You would have read in an essay called as Understanding the Entity's Environment.
Yes.
Every audit starts with that only. First, you have to understand what exactly the client needs. Sometimes there is a possibility that the client will say, I only want this. But when you just understand the client, you will get to know that, okay, what he was saying was just the tip of the iceberg. But what really matters is first have an initial discussion with the client as to what exactly specifically you want. And you have to take some time, at least 3 to 4 days, maybe for a small client, but please take some time to just check on the specifics he is saying. Suppose client is asking for a fixed asset or stock count. A client is asking for a fixed asset register count. What you have to do? You shouldn't directly estimate that, okay, my fixed asset register count is going to just take me 1 day. My scope is limited to this. But if you just enter into the specifics, you will get to know that, okay, I am having the client is having not just one branch, he's having 100 branches. You may have to go to. So what is very much important is getting to know it from the client first, in the first hand. First, have a proper discussion with him. That is, make the inquiry. Those are the audit procedures. You would have heard about audit procedure called as inquiry. First inquiry, we have a small discussion with the client and get to know what exactly they needed. Based on that, make a preliminary draft. And based on the preliminary draft, before actually entering into the engagement, do your own research. Just go to the client's environment. Or if it is nowadays, things are happening at the virtual mode. But fixed asset register or suppose say fixed asset register or stock count and all, you can't do it virtually. You have to go personally and visit it, right? So make sure that you actually go and check whether there is something which you didn't expect. Okay, maybe I didn't expect this from my client, but it is actually there in the scope. So once you get into the environment, you will get to know what to add in this. So this is the answer.
Yes, sir. And
hope you got clarified. If you have any follow-up question, you can.
Yes, sir. I got clarified with the example as well. But as you said, you first have to inquire about the client. So, did you face any challenges with any client as such in your practice with such client or some in your past?
Yeah, 100%. Like we have this, in books, it will be so polished. Okay, this will happen in this way. This will happen. 100%. The first step itself, client will say, "Oh no, I can't give you access to that. I can't give you access to that." But you can being an auditor, what you have one good thing is you can just blackmail them by saying that I will qualify your report if it is material. So that will actually hit. That will actually hit. And most of the time, it won't be the senior management who will be directly approached, who will be speaking to you. It will be operational level employees. They will be showing, they will be saying, you, okay, we can't provide that. But if things are getting worse, you have to escalate it to the senior management and things will happen.
Right. Yes, thank you, sir.
I'll go next. So, am I audible, sir?
Yes.
So, myself, Chinna Vinith, and my question is, so can you describe any situation you faced where you faced any challenge while maintaining your auditor's independence?
Okay. So this is like kind of from my personal examples. If you are going to practice, you will also face it. Now you can say, now you are starting your own practice. Okay. How do you think your first clients come from?
Referrals, sir.
Reference. Reference means it's from someone known, correct?
Yeah.
If it is from someone known, how will you get that independence?
It's
So
difficult,
that's
sir.
it. Now, okay. If you are suppose if it is a known person and you know that they are committing mistake, what do you say to them? No, you're committing mistake. Please don't come to me. Do you say that?
So I have to be professional, I think.
You have to do it professionally. But if your fee is like only based on that, and if you don't have any other income, what do you do? How do you?
Yeah, that might influence my
Yes.
decision.
So this is the thing. Like even now, I am facing it. But what I am doing it to discharges, I kind of take non-audit works. Okay. There are so many assignments for non-audit works. So
Mhm.
initially, whenever you are getting work, make sure that you are getting non-audit works. If it is from a referral, if it is
Okay,
from
sir.
a second level referral, it's not a problem. Like maybe you will not know your friend, but friend's friend you don't know, that become actually like kind of you become independent. That way it's okay. But there is always a risk of independence. We say that independence of mind and independence of body. Not every even how do you say? Suppose if it is a Reliance Industries or if it's a Tata Motors, you 100% will be a customer of that company by any chance. So
Yeah.
you can't just go by the plain words that independence means you shouldn't have any like anything of that sort. Things are so strict that, but practically it is not possible. Even all the auditors in the world know this. So
Hmm.
there will be certain things you shouldn't do the same. You shouldn't do the accounting of the same company, and you should do that. So there are certain areas which will be looking like proper gross negligence. You can't audit and account the same company, and you shouldn't be performing any services and the same services you shouldn't check. Then what is the point of it? So those kind of things you should try to avoid. But yeah, like make sure that like more than independence, like more than the related party, just independence is about whether your decision is getting influenced because of that person being close to you. That is the thing. So you have to ask your own question. And one more thing we are having in our firm to eliminate this problem of consequence of independence is me and my partner are there, right? There are like if I suppose I get a client, I audit the client, and you know about the quality standard for quality control, right? SQC, have you heard of it? Standards
Uh,
for quality control.
no, sir.
Okay, like it will come in your SA 220 standard for SQC is kind of another set of standards that is
Hmm.
also to be followed by all the practicing CS. So what that says is, I mean, even for small firms, better to have it. What I do is whatever audit I do, another partner will review it independently. He won't like what did you do, he won't ask it. Directly he will just look at my book. If you just look it from a judgmental angle or just he is auditing my work, actually you're actually getting two opinions. Right? We are actually having like a difference of opinion as such. Maybe I would have done it this way, my another partner would have flagged it that way. This is also possible. So in this way, at least you will get an objective opinion, right? So in this way, we are able to.
Thank you, sir.
Hello, sir. I'm Mercy. My question for you is when you start an audit, how do you approach identifying and assessing the risk of material misstatement?
Uh, can you repeat your question?
When you start an audit, how do you approach identifying and assessing the risk of material misstatement?
Okay. This is also coming majorly from the client's understanding of the client. That's what. Uh, First, we have to identify the business process of the entity. Just by looking at it, you will just understanding it properly. You have to just see all the step-by-step approach. For example, if you are taking one purchase, suppose purchase as a function, if you take it. Example, there are suppose say one department exclusively for purchase. First, what will happen is you have to check whether the purchase is based on the order which is from the production department, and based on that order, you have to make sure that the purchase, whether the purchase is happening properly or not. and you have to check whether the person who is purchasing, who is a purchasing manager, and the supplier, both of them are related or not. What happens if there is a problem? If the purchasing person from your company and the supplier who is in that company, if both of them are related, what will happen? They will they will have their own dealing with them. They will charge commissions, and the firm will be at loss, right? Or the company will be at the loss, right? So these kind of things. So how like this is a possibility of risk. So this is also a risk. So in many in small companies, these things you won't have the maker checker won't be there. Person who is doing the same thing, person who is making the accounts book, who is actually the accountant. He may be providing, he may be transferring salaries to the employee. You would have also practically heard this, right?
Yes.
The person who is actually accounting, he only actually transfers amount. What if that person actually alters their book and then actually they take it to their pockets? And there, since they are in charge of book, you will never, the owner, as a owner, you will never get to know that, right? To whose money, whose account. So these kind of things, it is possible. So this is also possible when we actually understand the process of the client. And I am also saying that risk is like anything. You can say there could be risk in anything, but not all the risks are important. That is why we have to check the material thing. So you will be any audit if you take, there will be limited amount of time only. There will be limited amount of time, say 3 months or 4 months, even if it's. So you have a proper scope, and you won't be able to check each and everything. So you have to properly assess your resources, and whatever you for the particular audit, if you find that okay, this particular area is going to take so much time to identify. Suppose if there is a company, just think of this as an example. You have a parent company and the subsidiary is in US. Okay. Now, if the subsidiary is in US and the major transaction more than the parent, if the major income is earned from the subsidiary, what will you think? It is like literally impossible for us to go to that US subsidiary and verify it. You have to actually believe in the US accountant's financial statement. What if that financial statement of yours is not required to be like? I'm not sure. I'm not saying this will be happening, but if at all, maybe ask the US laws if that if it is not required to be statutorily audited, what will you do? This is a very big risk, right? There is a chance that you may not be able to go to US to just audit. So in this times, this risk of material misstatements actually increases. If you are unable to do anything, what will you do? Better not to take a step audit.
Okay. Thank you, sir.
Hope you got your answer.
Yes, I got my answer. Thank you, sir.
Hi, sir. I'm Kavyashree. My question for you is, during a client's audit, can you tell me the process of vouching cash receipts and verifying trade receivables?
Vouching cash receipts. Okay. Cash receipts is a really difficult question to be answered by any auditor. Now, still, since things are becoming gradually online, now this dependence has reduced. But what majorly you can think about cash receipts is make sure that whatever you are having cash receipts, there is a subsequent bill. There is a subsequent bill which is actually being provided to the customer. And if it is cash is cash is received, make sure that the entire cash proceeds are actually getting transferred to the bank in the same way. So most of the retail stores, so many supermarkets, those kind of businesses actually have so much cash receipts. But nowadays, I have seen things improving drastically from cash to bank. Now, since the use of UPI has increased bank transactions, people have stopped using cash payments. But if there is there is actually, to be honest, there is no way to surely say how the cash transactions are happening. What maximum you can do is how much cash deposits actually the client is putting into the bank, how much cash withdrawals they're doing. So based on that, you can get an estimate, but you can't be short about how much cash is there. So this is about it. And you can also say that, most of the time, these cash transactions will be not immaterial. Maybe it will be just, suppose if it is a 10 crore company and if the cash balance is 50,000 only, and if you don't see any expenses in the profit and loss, what is that to check in the audit? So even if the client is doing some cash transactions, he is selling land by giving the cash, it actually doesn't come into your scope. To be honest, you don't have any means to actually check. You are not required to be the blood founder. You have to be just checking if something is actually according to your professional skepticism, if it is something is triggering, you can check only that point. You can't go to cash and all. You won't be in a position to check it all. So this is up to the cash. This is about the cash, and then regarding the trade receivables, simple thing. Trade receivables is easier to comparatively easier. You can get the confirmation from your customer, right? You can get the confirmation from a customer that my balance is this amount only. Unless the person and the customer are related, there is a chance that customer will give him the correct value. Correct. He will say that whatever he is going to pay, he is going to say the correct amount. He is not going to say excess amount, or he is going to say lower amount. In this trade receivables, getting the confirmation, you have to make sure that you have the auditor himself has to send that confirmation to the client instead of asking the client to send the confirmation. Okay. So if the auditor is without the knowledge of the not necessarily the knowledge, just make sure that it is a surprise check on if any major debtor is there. Please provide an email to that debtor and ask him the balance. So if he says some other number, and if there is some other number in the books of the company, you have to make some more investigation and then report it to the management. This is how it happens.
Yes, sir. Thank you, sir.
Sir, I'm Amrita, and my question is, when verifying a client's fixed assets, what are the key procedures you follow to ensure that they are properly valued and that depreciation is correctly calculated and applied on these assets?
Oh, now, okay. With respect to depreciation, yeah. Now there is a standard chart which is given in the Companies Act itself. There is something called as Schedule 5, I think, which is giving the rates of all the depreciation. What you may have to check is whether any set of particular assets falls within that chart of accounts. Suppose, say, if plant and machinery is getting charged at 15%, plant and machinery is charged at 15%, there will be certain items which may be at 40% also, it may be charged at 40% also. What will the client do in order to save his taxes? In order to save his taxes, what he will do? He will make sure that he is charging at a higher rate of depreciation instead of the lower rate of depreciation. So this is possible. So wherever there is any judgmental aspects, okay, I don't know whether this is a plant and machinery or some other kind of which will be charged at lesser or higher depreciation. You have to make sure that whether the judgment which is used by the management is sane or not. It should be reasonable. You can't make, and there are sometimes what happens is even the expenses will be even the things which has to be capitalized, they may be directly expensed off. Those kind of things, with your experience, or with your some judgment, you will be able to identify. Suppose, is it possible to expense out if you are purchasing a car? Is it possible to expense out your in a car purchase? Do you think it is valid, or expensing out the car purchase completely instead of depreciating? Is it valid?
I think it's valid, no?
It is valid in certain cases. Can you say me what will be that? Yes, it's okay if you say the wrong answer.
Yes,
Or you
sir.
can straight away say it's invalid. Okay.
No, I
See,
said it's valid, but okay, it's valid.
So a car will be anyway, it will be 8 lakhs or 9 lakhs, directly expensive. Car will come for more than 1 or 2 years, right? Directly
Yeah.
expensing it is incorrect. But for
Yeah,
certain clients, yeah. But certain clients, if I am a car dealer, what I will do, I will show it in my purchase receipt. Basically, you are expensing it out. So those cases, there is not a problem. So this is completely, you have to check whether the item is the fixed asset or the inventory for the client. So
Yeah.
these are the major areas where the confusion comes. So this you'll be able to identify. And regarding the valuation of fixed assets, right? You will be that's what this in AS as well as AS, they give methods of valuation. Though it is for accounting numbers or something, you just by looking at certain, when you are properly, everything goes to the understanding the business environment and their processes. You have to make sure, you have to check that whether the fixed asset or whatever they're saying, whether it is capable of giving you future output, right? Future revenue, right? So at any point in time, your fixed assets value shouldn't be more than your cost of acquisition, right? Most of the times. You say revaluation everything, but 99% of assets, most of them are depreciable assets. There's a possibility that more than your cost of purchasing that asset, the value won't increase. One thing is that, and based on the years, there is a possibility that, say, example, take your calculator. If it is a calculator, we will be actually expensing it off of, right, in our books. But you can also even say everyone's calculator works more than 2-3 years easily. Right? If you are not like if you are properly using it, it is kind of useful for more than 2 years. We are actually not depreciating it. Calculator can be used for more than 1 year, right? So this is actually a fixed asset, but no one uses it. This is because of a practical reason. So you just have to check out whether for practical reason what this calculator will be hardly 500 or 600 rupees. So there is no point in charging depreciation for that. So these are the considerations we'll take in the we'll take whether you have to depreciate, whether it is a fixed asset or not, and you will not be basically charging in showing calculator as a fixed asset, right? So in this way, you can just check whether the valuation is correct or not. Most of the things is dependent on your judgment as well. But the common steps which are used is just look at if you just observe the fixed asset or engage an expert. If you are unable to identify the useful life of machinery or something, engage an expert. Suppose if it is a specialized machine, you are thinking that the client is saying that okay, this will be useful for 15 more years, so I'll be depreciating this only. But you will only actually know it by engaging an expert. If it is so material, please engage an expert and ask that expert. Okay. If they do their audit procedures, everything, they will say that okay, this is coming. This is estimated only for 8 years, but the client is saying it is 15 years. Then you can, based on the opinion of the expert, you will be able to do that audit procedure. So this is like very rare case, but yeah, most of the times you will be able to find it out.
So can I ask something here?
Sure, yeah.
So for this valuation purpose, you told sometimes we have to ask this expertise people.
Mhm.
How do you find these experts and whose duty it is to find the expert? Is it the client's duty or is it the auditor's duty?
It's not like duty. There are two kinds of experts. One is the client's expert and one is the auditor's expert. If you're finding something misstatement in the client's financials, it is your duty. It is the auditor's duty to bring in that expert. So anyway, even if the client is bringing his expert, will you believe that? You can say that person can be independent unless he is independent, or you know that okay, this person is not going to budge. You won't be. You have no reasons to believe.
Yes.
What is the safest route? Always to better to get your own expert. What do you do? Like if you're getting sick, you go to the nearby doctor. He is an expert. But finally, if things are not happening soon, what will do? You go back to your
Just
family
the main doctor.
Yes, that's right. You will have a your own expert.
Okay, sir. Thank you.
Thank you so much for answering that question, sir. I think depreciation is something that we've learned for really long right now, but still there are just so many intricacies in that. I think you clarified that and answered Vineet's question also beautifully. So thank you so much.
Thank you, sir.
Hello, sir. My name is Snehashri, and my question is, as an auditor, you have a duty to detect frauds and errors. Can you share an example of how a carefully planned audit procedure helped you uncover a significant error or fraud?
Okay, this is like in your articleship experience, you will literally find everything is error or fraud, not just one. You would find so many blunders, so many things happening in the client space. This is one of the interesting questions. Is that more than fraud happens rarely. Fraud happens rarely, or maybe frauds may be happening, but it will be difficult to find. But once in a while, I can't disclose the client's name at all, but yeah, I can say I didn't discover it, but I was also part of that place where because some procedure of mine, this happened when I was in articleship. This was in the client actually, this was a case of a proper, the supplier as well as the purchasing agent, I said, right? This was the case. We did we could see that so many in purchase order there was certain some amounts. Suppose say it will be I will say an example of an amount 153,380. So 1,53,380. Okay, this number was there in the purchase order. In the invoice, 153,830 was there. Okay. Okay. Now suppose there are some 2,500 to 3,000 transactions. Will you be able to check everything, or just by looking at it? Okay. You also remember that as a CA, you won't be able to check each and every transaction. You have to engage your article assistants. You have to engage your employees. Yeah. Now you can basically sometimes, okay, if you know you are having Excel sheet, but most of that invoices, copies, purchase orders are way physical. Most of the clients refuse to give that. If they are having a proper system, if they are a bigger client, they will be having properly in a system, and they will be give you an extra extract and all. You'll be able to do it. But for the vouching purpose, what do you do? Basically, you take the physical copies and check. And this 830,380, it's like easily one can ignore, right? And like what really happened is like this. The client had almost 50,000 purchase transactions. Okay, out of that, some 25% of this had minor, almost it will be difference of 9. All these things, if you jumble the numbers, there is a math trick. I am also interested in math, so I kind of do this on stuff. If you take suppose 4 to 1 and 1 to 4, if the numbers are replaced in this way, that will be in the multiples of 9. The difference will be. Okay, we kind of some article assistant typed out all the numbers, like whatever he checked it, just to prove that his work has happened for documenting work. He has typed it out. We saw the subsequent receipt, like payments for that. It was in kind of like everything had difference. What is this? Maybe we are missing out something. We saw, and one of our sirs saw the difference, and he divided everything by 9. Everything was a perfect divisible by 9 thing. Then he understood, okay, why 300, 400, they're trying to earn something. So these are silly things. But if you see the 5,000 transactions, if it is just 900 rupees, how much is that? 500 into, it's almost 4.5 lakhs. Who is pocketing? The supplier as well as the purchasing it. 4.5 lakhs. It is this is so a simple thing, which is actually, this is one of the things. And this forex, like if you have a foreign subsidiary and all, this forex rates, that will be like what is it? In order to book, in order to show false profits, false losses, what people do, they take forex rates as like whatever they want. We saw that, like you can say, no, currently India, like Indian and US currency is 80 rupees, right? Like almost around 82 or more than that. I forgot it. Yeah. So if suppose it is 85 rupees, if we just put it in one small place, you will have lots of. It has to be for, how do I say it? Have you read this AS11 forex transaction? I believe most of you are in CA Inter only, right? No? Right?
That chapter is yet to come, sir.
Yeah.
Oh, okay. Just look at this. The AS11 will say that okay. I mean, all the closing balances like trade receivables, trade payables, those items should be translated at closing rate of that year. You will say closing rate, but people will have different closing rates. One website will show this as closing rate. One website will show this as some other number as closing rate. People will put their I mean, this can happen as oversight or quantity also. People will put like whatever numbers they want as the what is it? Exchange, like whatever numbers they want as the exchange. So in this way, they suppose even if it is 15 to 20,000, if the numbers are varying, that 20,000 may be able to help them pay more tax. So these kind of things happens. So we have these are the areas where you can actually. I mean, the fraud and the error as a thing, you can't say it as okay by doing this. Okay, this procedure if I do, there will be no fraud. Just by doing this procedure, there won't be no error. I can't say that okay, this procedure if you perform, everything can be you can be foolproof that there won't be no fraud. So as I said, I gave you an example, right? This divisible by 9. This example will apply only here. If you go to another fraud, that another fraud will not be related to this. That will be completely different. So fraud, kind of identifying fraud or error kind of thing makes you think kind of you have to think out of the box in order to find it out. But what you can basically do is make sure that all the minimal checks are done. All the this purchaser and supplier, what minimum check could have been done in order to avoid it? They had a like, super plan. Okay, no one is going to find out if there is minor 90 rupees or 100, but that is a like, good plan, I can say. Okay, that is a good plan. But what we could have, what could the company have done in order to avoid this kind of error? They should have basically checked whether the person, if any purchaser or supplier is coming, and if is like, yeah, first thing is to check whether the person who is paying or person who is the accounts department or person who is in the pricing department is not connected with the supplier. If this basic check was done, do you think this error would happen? So most of the times, this error can be prevented directly by having the proper internal controls. But if it is not happening, this is the like you have to think out of the box and find it. That's what I can say practically. But yeah, like it's like not just my experience. For firms like Big Four, when we having advanced models, they use something called as there are so many softwares available, and based on that, we can find out okay something is abnormal. You have heard this normal distribution curve and all, right? Normal distribution, mathematics 11th standard, 12th standard.
Yes.
Yeah. So it's like kind of normal distribution curves. It's like normally if the things are happening, it will be normally happening this way. If you find that some transactions are in abnormal ways to this normal distribution curve, you will be able to find it out. And there is something called as there will be another there is another audit tool which will help you find out some other things also. So these advanced tools and all Big Fours they use, this will help them uncover uncover frauds. Yeah.
Okay, sir. Thank you so much for answering my question. The reality is always different from what we study. So yeah,
Yeah.
thank you, sir.
It's
Thank you
not
so
like
much.
not always different. So what we study is also equally important, but
Okay.
we study the perfect things. Okay, things will be like this, but the
Yeah.
world is actually imperfect. That is what I
The
wanted to
Yeah.
say.
same procedure won't apply for everything.
Yeah. Yeah. Sorry. Did you ask me a question?
No. I told you the same procedure doesn't apply for each and every
Every
case.
time, yes. And the things also changed too. Yesterday, like previously they were what is it, auditing through like papers manually. They will audit today computers. Tomorrow it will be AI. So things will start changing. You can't have one proper procedure. Okay, if you do this, this will be eliminated. There is nothing on that. You are saying that now. Example, this bank reconciliation statement and all we are saying you are actually manually writing. No, I don't know why they have it in our syllabus. It is easy to do, but actually practically it's not used at all. It is not used at all. Directly you have softwares which will manually it will automatically do and give you that. So those kind of things are like not required.
Okay, sir. Thank you.
So can I ask something related to this? Hello. So,
Yeah. Sorry.
sir, if you find a fraud in someone's financial statements, like how do you convey it to the client?
Okay. Now, if you think that client he himself is a fraud, better don't take that engagement itself. I mean, if it is during the engagement, you have this caro, right? If it is before 1 crore, you have to say it to the client. We have found it out. What shall I do? What shall I do? If it's like not, I mean, you can at that time also you can say I don't want to sign your audit report. If I am signing, I will make it as an what is the disclaimer of opinion or modified opinion. You can provide. So this is the way. If the client is not accepting, usually client won't accept. So okay, if you're done the fraud, means no one will accept. He will say better to start. I mean, I will resign as an auditor. Like that, you can audit. The statutory procedures are there, right? That you can do. If it is more than 1 crore, you can report it to the central government. If it is a company.
Got it, sir. Sir, is there any class of companies or like nature of companies like which you have to avoid while taking them as clients? Like they might have a higher chances of fraud scenarios.
If you stop the recording, I'll be able to say. Okay.
Okay.
Yeah, okay. I don't want to blame it, but yeah, most of the times, wherever there are like political parties, like political persons, or like, those people are involved, it is better to be having a safer distance from them. Better
Okay,
not
sir.
to like make sure like at the end you have to save yourself. You can't sign nothing, and you can't go to jail for someone else frauds and all, right?
Yeah.
So like this is one of the things. And if someone is trying to offer you so much gifts. Please come to our office. We'll give you something or other. Please, if some person is trying to entice you, you maybe like sometimes you'll be enticed by the gifts also.
Ah,
But you have to make sure that those kind of persons, why do they do so? They are trying to hide something. So those kind of persons you have to be. It's like kind of completely judgmental only. But if I have to give one standard example, I can say, so many politicians are like having like so many under the table transactions. So they will try ask you to convert that into black into white. So those are the places you have to be safer.
thank you, sir. Sir, actually, the meeting timer is going to get over, so we'll provide a new link to you and we'll continue the.
Yes, sure, sure.
Okay,
Sure,
sir.
you can.
Thank you, sir.
You can provide. Please provide me along with the passport.
Okay.